are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand, especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com.
Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network.
Oh, God.
Are you nuts?
The chart.
With your host, Phil Randy.
And good afternoon. Okay, hi, I'm Phil Grandy, philsgang.com. Now, they're talking about increasing the money supply again. Now, remember what that does. Increased money supply also is a way to leverage, stocks. In other words, increased money supply, you'll have margin debt will increase. It's a leverage, so margin debt increases. Money supply, everybody wants to keep increasing money supply, but there's a lot of negativity to increase money supply. But no one looks at that. They just want to, look at, hey, man, good, let's have the Fed go to all the banks and we'll buy all their treasuries, all their assets. That gives them a ton of money in the banks, and they'll go out and lend to everybody. And that's what we're going to do again. See, that's what they keep doing. Instead of growing the economy by increasing productivity, they increase the money supply to increase the stock market. But the stock market gets to be phony, gets to be a big bubble. Because every time you increase money supply, you increase the margin accounts, that means you have all the FOMOs, or we call tourist investors, buying stocks right at the top, right at the peak. They don't ever learn. You got to buy stocks in what we call a sweet spot. In fact, in 1998, I designed our charts here at Phil's Gang to identify what we call the sweet spot. That's where you buy. And each stock, if you're smart and you just stay with the six best stocks, each stock has what they call a sweet spot. That's the area on a chart that has the highest probability of not losing money. That's where the pros make all their money. Because if you have to say you trade like a pro, pros don't have any more than 6 stocks. But here's what they do know. Each one of those 6 stocks, that pattern called the sweet spot will always rotate back. So if you got 6 stocks, that's 12 times. During that year, you're going to be able to make a lot of money in the sweet spot. But here's the beautiful thing. But it also reverses to where you make money in a sweet spot, but decelerating, going down where you can sell short. And because people don't short, that's why 90% of the people who are in stocks lose money. But they're talking again, they want to start increasing money supply, which simply means they go to the banks, buy their assets, buy their treasuries, with the idea of plugging the banks full of cash now because we bought all their treasuries, and they're going to loan money out to the folks. Well, that's not quite true. Yes, they will loan to the folks, but most of that money is used for stock buybacks. That's right. Most of that money is shifted to CEOs of publicly traded tech companies, especially in this AI age, so they can buy their own shares to pump that stock up. When that stock starts going up, here's what Wall Street knows. The FOMOs, those who fear of missing out, or I call them, the tourist investor, they go nuts. They can't stand it. They jump in at the top. No, they don't get in where they're supposed to get in, where the sweet spot is. That's where you make your big money. But more important than the big money, that's where you have the safety. That's your insurance policy. That's where you have the highest probability of making money, but more important, highest probability of not losing money. So what they're going to do again is focus on another QE is what it really is. Let's keep pumping money in, increase money supply, get the consumers to consume. And then what happens is as the stock market starts going up because of the increased money supply, all the FOMOs would jump in and the stock market won't come down. Because remember, when the FOMOs jump in, they're always buying their stock on margin debt. So it's when they do this, expand the money supply, remember what they're trying to do. They're trying to manipulate the rates to lower rates, to increase stock buybacks. That's why they increase money supply. So, I mean, they're telling you, oh, we'll increase the money supply so there'll be more business spending. That's a bunch of nonsense, okay? It used to be that way, but no more. Businesses, publicly traded businesses, okay, they use the money to do stock buybacks, and their stocks keep going up and up and up without increasing profits. Now the consumer starts consuming. That's the danger part. They start buying again, even though they got tremendous amount of debt already. They double and triple their debt, for God's sakes. That's why you just can't keep doing this increased money supply. If one day we're going to have a hell of a crash. But I tell everybody right now, don't worry about a crash. Not while Trump's in office. Because Trump, I don't think, will let it occur until he can't control it anymore. But right now he controls it. He controls the mood. And all this AI, you know, the hype in this AI is going insane. The hype is far larger than the returns on the run rate. Now get this, and I told you this last week, the AI investment run rate is at 1.5 trillion. In the last few months, they spent 54 billion. Look how much more money they got to spend. So don't be worrying about a crash right now. Okay, if we get a crash, like for example, I was right on. I told my gang members about 3 weeks ago, our stock, our gold, GDX, miners were up about 92%. Now we weren't up 92%, but GDX was up 92%. My gang members, I would say at an average, were up 30% to 55%, depending on where they got in. Hopefully they got in at the sweet spot. So all this open AI, okay, has got crazy. And again, imagine 1.5 trillion they're investing, and they're not getting any returns. The returns are the problem. They're terrible. They're low returns. And so again, to go in and increase money supply right now with what we got going on, think about it. I mean, first, all the wealth, the stock wealth is incredible. 47 trillion. If you take the aggregate of our stocks, we talked about this last week, what's the value? 47 trillion. Everybody should be rich. No. Only the top 10% are wealthy. They control 93% of the 47 trillion. The top 1% controls 25 trillion of the 47 trillion. So this is so lopsided. This country is so lopsided with wealth. It's all at the top. This is very, very dangerous. The bottom 50% wealth increase. If you took 10 years ago to today, the values of stock went up to 47 trillion. 47 trillion. Now, the bottom 50% wealth only increased, get this, $335 in the past 10 years. So the top 10% owns 93% or 43 trillion of the 47 trillion. The bottom 50% wealth increased by $335. That's it. What are you, nuts? Main Street bankruptcies are increasing, up 24%. But here's what they say, though. This is what really gets you. Listen.
We see an economy that's been resilient. We see companies that are weathering the tariffs really well. We see a stock market and a wealth effect that just keeps going and going. And this CapEx boom on AI, on the chips, on the data centers is something I think everybody's underestimated this, not just the scale, but the speed at which it's playing out. And it's probably making the economy a lot stronger than most people realize.
Lie, lie, lie. Lie, 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 lie.
God, do they lie. It's unbelievable. They sure do. So, all this AI. Now, listen to this. People are really doing well, right? The economy's resilient. No, it's not. The economy's not resilient, not at all. And I'll show you in a moment.
I was just looking at the last time the Fed cut, Dan, with inflation at these levels, October '08, right? So how much are you worried about the other side of that mountain?
Oh, the other side of that mountain is going to be horrific. I mean, I believe that sometime late next year, you end up with a 30 to 50% correction.
And I said, I think it's going to be the first or second quarter of 2026. That's what I believe. Also,
NASDAQ was up 86% in 1999, and then it started 2000 up 24% in just over 2 months. Obviously, the hangover on the other side was terrible, but you made a lot of money just sort of staying with it as long as you had investors believing everybody's going to win.
and everybody doesn't win. The people who win are the people who have a weapon. And what's that weapon? Shorting. Know how to short. Because when you're trading stocks like now, and everyone knows when they're buying stocks, there's just such a huge bubble. Such a huge bubble, especially with the margin debt, the leverage of our margin debt to money supply. You got all those FOMOs buying on debt, right? So, but everyone knows, and they're all fearful, but they go in and buy out of greed. But here's what's going to happen. We're going to continue to rally this market because of the AI boom, okay? The AI boom. We're going to rally. I mean, we get no real jobs out of it. No, do you imagine? They're going to spend $1.5 trillion, they're going to get a few jobs? That's crazy, isn't it? Think of all the money they're spending on AI, and we have the worst labor market in 20 years. Just insane. AI is a bubble, but it's going to really last a long time. So I predict it'll be the first or second quarter when we're going to get a correction, not a full-blown crash, because Trump won't allow that to happen, okay? So, but just think about this money supply and what can happen. The money supply, they make that money available to folks. This is what they tell us. They go in and buy all the assets from the banks. When I say assets, I'm talking about T-bills, treasuries, and when they buy it, that's cash that the banks have now that they didn't have a few moments ago. Now, they'll tell you they're using that money to get to the folks to go out and buy, but that's not true. Most of those loans don't occur. They make them too difficult to occur. Banks don't want a loan to small businesses. Banks don't want a loan to a retail customer. Why would they loan? The household debt is $18 trillion. That's $105,000 per person. What are you, nuts? Mortgage debt. We never had mortgage debt at $13 trillion. Credit card, $1.2 trillion. That's insane. And people are paying 29%. As much as 29%. They'll never get out of debt. Auto debt, $1.6 trillion. That's crazy. And the foreclosures on autos is unbelievable. Now, we do have, again, this economy, we had gold, and gold really did well, didn't it? And people are afraid now it's all over for gold. No, it's not. Now, we had GDX, our miners, they went up 92%. And we started to buy the miners back in February of 2025. I started to, took a lot of the profits we had back in, it was around June 4th, 2025. She went sideways for quite a way. She didn't break out. Then finally she broke out in August of 2025, and we scored big. I mean, GDX just went, here, I'll give you the percentage, went from $50 all the way up to about $85. 50 to 85. That's a 70% gain. And the buy signals were terrific. If you look at my color-coded chart, we'll call our Pro 2, we had everything in place. We had volume in place. We had a consolidation pattern with a breakout. And right after that breakout, we had another consolidation pattern. Okay, right in a row, 2 of them. Are you kidding me? And then we had this beautiful, in September of 2025, we had this beautiful flag pattern. Everything just fell in place. And then I told everybody to start getting out. I said, not get out totally, but take a lot of your profits. That was around October 7th. I said, start taking profits because we're going to get about a 5 to 7% correction. And of course we did. But should you dump everything now? Well, we'll talk about that when we get back. Phil Grandy, philsgang.com. Join.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When you listen to the advice of Phil Grandy at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand, especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. Welcome back. Learn, invest, and make profits with Phil Grandy. Simply go to philsgang.com. Now, here's Phil.
And welcome back. My name is Phil Grandy, philsgang.com. We are a stock trading education group. Since 1998, we've been helping retail investors just like you. And the key is not only learn how to buy stocks, but you got to learn how to sell short. So that when these bubbles do burst, and they all burst, there's not going to be an exception here. This is the biggest bubble ever, what we're in now. Big bubble, huge bubble, it's going to burst. But wouldn't it be nice to have the confidence to say, I don't care, I'm looking forward to the burst. Because you always make more money when the stock market goes down, because it goes down twice, 3 times as fast. Because every time it's going up and it pulls back a little bit, the FOMOs jump in and buy every dip or buy every peak, and they always lose their butts. So shorting's nice because once you got all this money leverage, the M2 money supply is all levered up, meaning that you have all these margin accounts, margin debt, and the market starts to crack and starts to break that bubble. When people panic because they got margin accounts and they get a notice, you know, you got a margin account, it's due, you got to send me a check for 25 grand. And the people go, no, just sell my stock. Then one, and then next one. And panic sets in. It's a wonderful thing to watch because everything starts just collapsing so fast. We're on the way up. You always have all this money supply, and every time it pulls back a little bit, somebody else goes and buys it, pulls back, buys it. It takes a long, long time for a stock to go up 30%. You can go down 30% in a couple of days because on the way down, they don't go, oh, I'm going to buy a little. No, because panic sets in. So right now, again, I want to go back to your gold, finish that up. Don't panic with gold because now the one I would be nervous about, if you're in silver, I would not be holding much silver right now. And I told my members on silver and gold, going all the way back, as I said, I think it was around September 26, I think it was, something like that. You got to get out now. You got to take most of your, or a good amount of profits because we're going to have a 5 to 7% correction. And one day, we had a 6% correction. And I knew, and I said this before, everybody asked, how'd you know that? How'd you know that? Because remember, on October 8th, the stock market gold took off, hit 4,100. I think it was October 10th is when the banks came in and said, buy, right? We're going to 5,000. And all the FOMOs jumped in, went crazy. And I said, here, tell them, take our stock. Here, take my stock, FOMO. Here, take my stock. And sure enough, when the stock went straight up after the banks projected 5,000 an ounce, bam, it went right down. We knew that was going to happen. I've been doing this since 1998. Just like when you see a magazine, front cover of Forbes, and there's a CEO, let's say CEO of Coca-Cola or something, you know they're going to go broke, and they usually do when they're on the front cover. Okay, so what I would do with my with POS right now, and we're going to do it, we're going to put a short scout on POS for I'm going to instruct my gang members right now to put a scout. What's a scout? A scout is only one share. You're not putting one share on to make money. Eventually that one share can be 1,000 shares. But you always start out with one share till you get the momentum. Now what's that mean? When you start out with one share shorting or going long, you want to see a follow through with volume. So my color-coded chart just turned red on POS. It's below the 25 and 50-day moving average. I have a possibility, let's see, give me, Willie, 34 to 28, what's that, 7%? 34 to 28, something like that.
17.
Oh, yeah, 17%, great. So we have an opportunity of a 17% gain by shorting it. And that could go down in 2 days, 3 days. So we're going to be in there right now, and Willie's going to be sending all our gang members an alert to sell short POS with a scout. Now, then we'll watch every morning and see if we make a new low. And we do, we'll keep adding to that new low. Now, in the meantime, if you look at GDX, our big winner, okay, this just broke the 50-day moving average today. But it hasn't confirmed, it hasn't broke the 80%. You got to break 80% on my chart before it turns red. When it turns red, then we'll short GDX. See, the beautiful thing is, let's say you made an average of about a 32% return, okay, on GDX. Remember, it's up 92%. 32% is pretty easy to do. But let's say you made 32%, and now she's on her way down. Isn't it nice to know that when she goes down, you just switch your position, and you're going to make money on the way down? and you're going to make it 10 times faster than on the way up. But imagine people who don't have that skill and they're scared to death and they listen to these dopes on Fox and all these MSNBC and all these networks, okay, business networks, and they tell them, okay, now on the way down, keep buying or add to your position, keep adding to your position, cost average down, cost average down. Are you nuts? Never, never, never cost average down. Are you kidding? It should be illegal. The people who tell you cost average down put you in a worse and worse position on the way down should be in jail. That's ridiculous. Okay, so what we got right now is gold. Watch this carefully. We can make a lot of money shorting gold if it cracks because there'll be panic set in. And then, okay, we will wait for a buy signal to get back in. But remember where we got in. We got in these stocks. We could have gotten in more of a perfect area. Matter of fact, if you look at January 30th, okay, or we got in, let's see, where was it again back here? February. We're just in the perfect sweet spot. Perfect sweet spot was turning green. Perfect. That's what you got to catch, those sweet spots. So that's doing good for us. Now we're looking for our sweet spot to the downside, and she's forming now on GDX. Let's see GLD. GLD, no, GLD is not forming right now. GLD is down, but there's no sell signal on GLD. GDX, we have a sell signal, okay? I'm sorry, POS, we have a sell signal. POS, we have a sell signal, okay? So we just got to wait and see here what happens in the next couple of days. The other thing is that when you got to remember the banks. The banks have taken a beating. If you recall, when the bank earnings, they're the first ones that come out. And they're telling us how wonderful the bank earnings were. Nothing like it. And I said to my members, don't listen to anybody. That was on, I think, October 10th, if I'm right. The banks started to come out October 10th. And I said, do not listen to these people. Do not listen to jibber jabbers. These banks are in trouble, and they're going to get hit hard. And guess what? They went up, and my color-coded chart remained red. That's the beautiful thing about it. It remained red. It follows the money. And it turned red, and I told my members, okay, just don't buy these damn banks. They're going to go down. And sure enough, all these banks got hit. After they went up on the initial earnings, they turned around and all started to go back down. So there's a little buying coming in now. They're starting to buy these banks again, okay? But you got to be very careful where you get these banks, where you start buying. The one bank I have been following, we do like a lot, is Morgan Stanley. It's had a lot of good relative strength. As the banks have been coming down, these have not dropped. So we're watching Morgan Stanley. So if you want our list of stocks, our working stocks, just go to philsgang.com. Okay, as I say, we've been a stock trading education group since 1998. All right, so going back to what I started, that's very important. They're going to increase money supply. Okay, and they're doing it because they want to get money into the hands of consumers because the economy really sucks. Okay, the economy is not doing well. They're trying to push the economy back up. So the government is going to start requesting again an increase in money supply. And they always do that when the economy slows. They do it to try to pump additional spending and try to build the consumer confidence. It's not working. But I'm telling you, a lot of people right now, they don't even want the money because they're so in debt. When you have household debt of $20 trillion, that is nuts, okay? That's about $105,000 per person. That's insane. So that's a tough one. Now, there's a big disconnect. Remember, our economy is not the stock market. The stock market's not the economy. Okay, there's a big disconnect. Okay, if you think about it, the median price for an existing home has been down for a third straight month. That's a 5-month lowest level in 5 months. This is really bad. The median price went down 1.7% from August, but now it's up 2.1% from a year ago. So that makes the 27th consecutive month of year-over-year price increases. Now, last week, the CPI comes out, inflation. This is a joke. You think housing's a joke, or you think there's a disconnect between the market and the consumer. Get this, CPI, inflation, from May to July 2025 was up 5 straight months. Inflation. Now, the CPI inflation came out September 2024 was 2.9%. This week, we said, okay, what's it for September 2025? How well did we do with inflation between 2024 September and September 2025? We did worse. It went from 2.9 in September 2024, the inflation, and it went up 3.0% 2025. But listen what they did. The stock market went wild. We had an all-time new high again on the SPDRs, because here's what they said. Well, yeah, we understand inflation's higher now from 2024 to 2025. It went up. It's hot. But wait a minute. They said that inflation, the CPI, was going to come in at 3.1. But it didn't. It only came in at 3.0. And they went nuts and celebrated. The S&P hit an all-time new high because the damn thing, the estimate, they beat the estimate. But wait a minute, who cares about the estimate? So if your inflation for September 2024 is 2.9, you check and see what's it a year later. That's 1 year you want to check, right? Is inflation up or down? It's up to 3.0. But the estimate was for it to be up from 2.9 to 3.1. But because it went from 2.9 to 3 instead of 3.1, oh my God, they went nuts, start buying stocks again. Isn't that wonderful? I mean, just think how stupid this is. People buy into this. So this market went up, hitting another all-time new high, the S&P, because why? In reality, inflation was up. But because they looked at it, well, it may be up, but yeah, we were better than estimates. Give me a break. So we fell for the third month in October, right in a row. Now, think about this. The S&P has gained since 2008, 358%. The NASDAQ had gained since 2008, 2,000%. Your 401k is not even at 7%. Not even at 7%, your 401k. And I'll double check that number. I looked at the number and I thought it was quite low, but I'll double check it. That's what they're saying, but it wouldn't surprise me. 401ks are getting crushed. But the stock market, think about it. The gains that we've had, the NASDAQ since 2008 is up 2,000%. The gain since April low is up 55%. It's just unbelievable, isn't it? And we have the biggest earnings lie in history. The S&P 500 companies, they've been lying to us. Out of the 500 companies, we only have 10 that have earnings. Just 10. 490 don't even have earnings. So this is all about following the money, and then you'll be always correct, because if you know how to sell short and long, you'll always be making money. Check us out, free for 10 days, philsgang.com.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.